Hi, everyone. Sean Gilliam here with Location Real Estate. Welcome to another episode of Real Estate on the Front Range. This week, we're going to be taking a look at my monthly market update for the month of August. And as you know, I take a look at our most recent data, and that's from the month of July. And so we'll take a look at the figures and point out some of those trends that I mentioned in the last couple of market updates, just to let you know what we can expect to see in this shifting housing market. But before we get into that, I do want to point out some recent news in real estate. First of all, our mortgage rates have dropped right now. They're about 5.25%. They were even as low as 5%. One lender friend of mine was able to get offer my clients like 4.7 to 4.9, but they've come up a little bit since then. They're still fairly low, but just something to keep in mind if you're buying a house and you're looking to capture or lock in on a lower interest rate. Another thing that came out in the news this week is the National Association of Home Builders officially declared that they're in a housing recession for new construction. This is because the cost of homes have gone up so much related to interest rates, as those have risen quite significantly in the last couple of months. And then also supply chain issues and the cost of materials for building homes have gone up. So it's just caused a lot of issues for them. From an agent side, I've just seen new construction listings, new construction communities are offering incentives. They are reducing prices on their inventory. And as such, some of them are slowing the building process. We've seen a decrease in housing starts in single family homes and multifamily homes. So this is a bit of an issue as far as inventory is concerned. If builders don't keep up a steady pace of building new homes, that is going to further hurt our low inventory issue that we already have. So that is the negative aspect of it. In fact, the builder confidence index fell 6 points to 49, the first time they fell below 50 since the spring of 2020, when the housing market really took a dive because of the pandemic. So with that in mind, that is a negative aspect as far as inventory is concerned. The positive way of looking at this, if you're a buyer and you're looking at buying a new home, this is a great time to do so because, like I said, new construction communities are lowering prices, they're offering incentives. So this could be a great time for you to get in and get yourself under contract on a new home. Also, with the resale market, also a great time to buy a home. If you saw my last month's market update, as well as a video I put out recently for buyer and seller strategies, I advise buyers to buy right now just because competition is low. Homes are sitting on the market for a while. You can even sit and wait and see if they do a price drop. And then also sellers are very motivated to make things look more attractive to buyers. So the negotiations are in your favor in some cases. So great time to buy. But that is one of the things that is going on in the new construction market, as they're talking about they're in the middle of a housing recession. On other news that looks like it might be positive, I'll read a quote here from Lawrence Yun. He is the chief economist for the National Association of Realtors. And he stated that the slight deceleration suggests that consumer price inflation may have peaked. He's talking about the rate of inflation dropped from 9.1 to 8.5%, which suggests that mortgage rates also may have peaked. So if inflation is possibly peaked, then mortgage rates have possibly peaked. So that's a good thing if we're right in the 5% range for mortgage interest rates, because that's higher than it was, but it historically is still very low. He goes on to say that if there is a sustained decline in gasoline prices and more production of apartments and single family homes, consumer prices will pull back, encouraging the Federal Reserve policy to be less aggressive. And as such, mortgage rates will fall. So keep your eye on that. If those things, if those variables come together in a way we would hope so, inflation hopefully may have peaked, according to Lawrence Yun. And if that's the case, that bodes well for all of us in the economy. And then also with that, mortgage rates may have peaked. So we can expect them to go down. I've been talking to some people in my industry recently, and they believe that interest rates should start to decrease by December of this year. So potentially good news on the horizon. So like I said, just keep your eye on that. Now I want to take a look at the data here, as you've seen on my screen. This is for Boulder County. I like to look at Boulder, Larimer, and Weld County. My main office is in Longmont, and it's kind of the epicenter of all three of those counties come together right near where my office is. And of course, buyers and sellers that I work with all live in these three different areas. Vastly large counties, especially Weld County, but most of my business is in that area surrounding Longmont. So I want to take a look at the data here. As I mentioned before, we can expect to see some trends in this shifting market. So days on market. So the time that a home, the time a home is listed until it goes under contract, we're going to see an upward trend in the number of days. And I think the numbers will prove that out. Also, the percent of list price received. So that is going to trend downward, and we're going to see that bear out too as we look at the data. And then the inventory of homes for sale, as well as that month supply of inventory, those metrics will continue to trend upward as we're going through the shifting market. So let's go ahead and take a look at these numbers. For Boulder County, we can see that days on market until sale is 34. When we compare that to last month, the prior month's data, that's June of this year, it was 28. So we're starting to see that upward trend already in that days on market until sale. Homes are staying on the market longer, and homes are not going under contract in the first or even second weekend. They're sometimes staying on the market for a month. Also, that percent of list price received, if we scroll down here, percent of list price received for Boulder County was 99.7%. Last year at this time, it was 104.7%. But in comparing it to June of this year, when it was 103%, we're starting to see that downward trend. And this is all part of that market shift. Inventory of homes for sale in Boulder County for July was 601. When we compare that to June of this year, when it was 528, we're starting to see that upward trend of homes for sale. Now, I will point out that that's not an indication that we're getting a significant amount of new listings. In fact, if you look up here for new listings, that's 439. That was about on par with what it was for last year. So we're not seeing a significant increase in new listings. We're just seeing homes stay on the market longer. And anytime you add new listings to that, that just increases the number of homes that are for sale. In regards or in relationship to that, that month supply of inventory is 2.1 month supply of inventory. That was 1.8 in June of this year. So we're starting to see an upward trend in inventory of homes for sale and that month supply of inventory. Now let's take a look at Larimer County. Similar data, days on market until sale was 41 compared to June of this year when it was 36. So we're starting to see that upward trend. Percent of list price received is 100.9%. So homes on average are selling 0.9% above the original list price. June of this year, it was 102.8%. So we're seeing that downward trend in that percent of list price received. Also, for inventory of homes, 795 homes on the market this month in all of Larimer County. In June of this year, it was 712. So we're seeing that upward trend. Month supply of inventory similarly is also trending upward. It was 0.8 for June of this year. Now it's 1.7. So it's almost gone up a whole month supply of inventory. And that's the trend that we're seeing here. And of course, you can see the average sales price in Larimer County is $688,000. And I forgot to point out too, in Boulder County, the average sales price of a home is $1,002,052. So slight downward trend. That just depends on which homes are being bought up in the market. But all that to say, Boulder County is an expensive place to live on average. Larimer County also fairly expensive. Now let's jump over to Weld County, and we'll see that days on market until sale. This is a bit of an anomaly. Last month or June of this year, it was 37 days on market. Now it's 30, so it's trended downward a little bit. It's possible, I can only speculate because I haven't looked at every single transaction that's gone on in Weld County, but it might be that people are moving to Weld County because it's more affordable than Boulder and Larimer counties. So that could be an indication there that homes are getting snatched up faster because they're more affordable. If we look at the percent of list price received, it's 100.8%. That is down from June when it was 101.8%. So we're seeing slight evidence of that downward trend in percent of list price received. Inventory of homes for sale is 942, and that is down or up rather. It's trending upward from 763. So we've seen a significant increase in listings available on the market in Weld County. And then also that month supply of inventory, it's 1.7 in June. It was 1.3, so slight trend upward. We'll pay attention to that as we look at next month's data when we're looking at data from the month of August. So those are the figures. If you take a look, like I said, the days on market is trending upward. That percent of list price overall is trending downward, and the inventory and month supply of inventory are trending upward. And so we'll see how that continues with those mortgage rates. If they go down, that might bring a whole pool of buyers back to the market. Again, I encourage you, if you're looking to buy a home, this is a good time to get on the market and do so before that competition comes back when those rates change. And as we saw a couple of months ago, those rates changed rather significantly. And it's possible they could do the same in a downward scope as well. So if you need anything, feel free to get in touch. You can reach me here at 970-313-6706, or stay to the end of the video and you'll see my contact information there, including my email and my website. We'll look forward to talking to you soon. Take care.